Welcome back, everyone. Welcome to Advanced Trading Part 1. I'm here in a very cool tool that I'm going to advise that you guys get right now. It's called Coinigy, Coin-I-G-Y. Go ahead and get Coinigy, coinigy.com, set up an account for free. This gives you some really cool analytics and the ability to see certain patterns in charts that aren't as easy to see on the exchanges themselves. So you can really use this as a great tool to recognize patterns and get a feel for the market. So as you can see over here, there's a lot going on in this whole screen here. But you can see we've got all these different currencies. ADA for Bitcoin, ADA for ETH, ADT for Bitcoin, etc. We can filter these and we can simply type in XRP, for example, and we can bring up an XRP chart. It will also show us, once this chart loads, it'll show us the asks over here on the right, and if we scroll down, it'll also show us the bids on it as well. So it'll show us what's going on in the marketplace. It'll tell us the volume, the order quantity, the price and Satoshi value, and so on. What's actually kind of cool about Coinigy is it gives you, for every single alternative currency, it takes all of the exchanges and it gives you an average. So you're actually going to see like an average price throughout all the exchanges for one particular coin, the 24-hour low average, 24-hour high, etc. So what we want to do right now is go ahead and open up this chart because I want to talk to you guys about bull versus bear markets, resistance and support in bull and bear markets, and trends. So let's go ahead and zoom like way out to the beginning of XRP, and let's just look at the beginning of time for XRP. So we should go to a 5-year chart and let it load. So look what's gone on here. We see that it comes in 2014, December 22nd, 2014. We see that it comes in and it kind of stays level for, about 3-4 weeks here, and then it just tanks. It just tanks and it's in a downward bear market. The first thing that I want to show you guys is bull versus bear trends. Typically speaking, in order for a trend to actually be a trend, it has to have at least 3 highs and lows. So it started out here, and then we can basically see it went in a downward bear market to about here. We can see that we have basically the high where it started out here. We've got a low, we've got a high again, we've got a low, got a little bit of high, we've got a low, we've got a high, and so on. Now the points don't have to be very big, but for it to be a trend, you do have to have at least 3 points. So we can see that we've got the beginning here, we've got 1 point here, 2 points here, 3 points here, a 4th point here, small. But we can see that it's really going downhill, especially if we're looking right in here. We can actually see it better right here. We've got 1, 2, 3. This is a downward bear trend. We can really see that is very apparent right here. We've got a point here, we've got a point here, a point here, and a point here. So we really can draw 4 points from this. 1 point here, 2 points here, 3 points here, 4 points here. And by point I mean it's bouncing low, going high. 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 That is a bear trend, a bear market trend. Now if we look over this way a little bit and we just zoom in a tiny bit, we can see that we've got a bull trend. So if I take this line right here and I draw another one, go from here up to here, there's a lot of volume happening during this time, but we can see 1, 2, 3, 4, and so on. We can see all these high points in here. This is a bull market. We're entering into a bull market, okay? So these are the trends that I want you guys to be able to see, recognizing bear from bull. We have a bear market over here when the coin hits the exchanges and launches, it moves into a bear trend. It kind of levels out a little bit in here, finds some support from the buyers. It's not really dropping down any lower than this. It kind of finds its resistance support line. It kind of stays there for really, May all the way through into, April almost, March. And then we move into a bull market that has what we call a breakaway or a breakout. It breaks upward. It has a massive breakout. Huge, 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 huge breakout. And we can see a point there. We can see a point there. And then it ends with a final point. It actually ends way up here. You see this massive spike right up there? It actually goes way up like that. So that is a bull trend. Now, if we break apart the cycles of bull and bear trends, here's what we know. In a bear trend, you have what we call a front side of a trend and a back side of a trend. You have front side of a bear trend and a back side of a bear trend. In a bear trend, the front side of the trend is red because the bear is going downhill. The front side of the trend is red. The back side of the trend is green. So what would probably be the best thing to do here is if we took this line right here and we brought it to right here. Here's the beginning. This red bar right here, this red candle, this is the beginning of what turns into a bear trend. So this is the front side of it. It's going down, it's going down. This is the back side of a bear trend. Front side is red, back side is green. Front side is red, back side is green. Front side red, back side green, red, green, and so on. Okay? So in a bear trend, things to write down. The front side is red, the back side is green. On the reverse, in a bull trend, the front side is green because it's going up. It's going up in value. The buyers are pushing it up. And any low spots along that bull market are going to be red, and they're going to be the back side. Okay? So in a bull market, the front side of the trend is green. The back side is red. The front side is green. The back side is red. So if we zoom in here, you'll see that during this, there was only one part of the backside here. There was only one area where it was a backside. So the green would be front side in a bull market, the red would be backside. Green would be front side, red would be backside. So that way you know what the front side of a bull market is, what the backside of a bull market, what the front side of a bear market is, what the backside of a bear market is. And you know that in order for it to be a trend, it has to have 3 points. Here's another trend we can see right in here. So if I take this line and I go from right here down to right here, okay, we can see that it's got a point in here. We can see it's got a point in here, a point in here, a point in here, and it goes back down again. That is a bear market trend. Okay, so now you understand what trends are, bull versus bear. Now let's actually take a look at resistance and support in bull and bear markets. And once again, guys, bull markets are controlled by the buyers. Okay, the buyers are pushing the value upward. They're buying it up. Less is available. The sell orders are being filled. It's driving up the value of the coin because the demand is there and the supply is not increasing as fast as the demand is increasing. So bull markets are controlled by the buyers. These upward trends are controlled by the buyers. The bear markets are controlled by the sellers. There's an availability. They're selling out their coin. There's a huge supply, but a much less demand. They're circulating it back out into the market, and the more that's sold, the more is available, and it's devaluing the coin. Bull markets are controlled by buyers. Bear markets are controlled by sellers. Now let's look at resistance and support in bull and bear markets. You can actually see, here's a very common situation that we see down in here. I'm going to try to move this up a little bit and zoom in. But do you see what's happening right in here? So if we take this line right here and we go from right about here to, let's just say, right here. Okay, and then we take another one and we go from right about, well, let's just say the same area, right about here to there. Can you see during this time period, and notice, do you see this blue line right down here? This blue line that keeps coming along right here. This is volume. So if you notice in here, you can barely see it all along the bottom here. and it's barely a little bit more right in here, but it's very consistent. It's just kind of almost straight more or less right in here. That's volume. There's not a whole lot of volume being pushed, not a whole lot of buys and sells going on. And you can also tell because you can see the length of the candlesticks here. Not very much. There's not a huge variance in there because there's not a whole lot being bought and sold. There's not a whole lot of demand. There's not a whole lot of supply. It's just not very active right now. But obviously, the volume goes up, as we can tell by this blue line in here. The volume goes up. There's always a spike in volume when you have a breakout. This is called a breakout right here. It's breaking upwards. It's always a spike in volume. And you can see that although it's coming back down here, there's a significant amount of volume. It doesn't necessarily mean that just because it's going up is the only time it has volume. Volume refers to when it's either being bought rapidly, sold rapidly, or a mixture of both. And we can see there's a mixture of both in here because we've got some green, we've got some red. So the volume's actually higher in here because they're, taking all of this into consideration. There's a lot going on. But you see in here, there's not a lot going on. Very low volume. You can barely see that blue line, which represents volume in here. And you can see literally from, let's see, April 4th of 2016 to October 24th. So you have literally over 6 months, 6.5 months, where not a whole lot is going on. But do you notice that all the activity, except for this right here with this lower shadow, this long lower shadow here, but you can see all of this activity, almost every single bit of it, is all in between these two lines. So here's what you're seeing. You're seeing buyer support not allowing it to drop below this line because they are buying it a little bit, and because they're buying it just that much, the value's not dropping below that point. Then you've got the sellers that it's not going above this point because they can't sell it more because there's not enough buyers. And so they're not able to actually justify selling it for a higher price right now because there's not enough volume, there's not enough buyer support to be able to dictate that it can be sold for more. There's not enough buyer support pushing it up, but there's not enough seller resistance pushing it down. So here we see a very classic example that you will find very often where you have buyer support and seller resistance keeping the market just really in kind of a neutral state. It's not really going up, it's not really going down. There's not a whole lot happening here. So that's buyer support and seller resistance actually on a chart in a market. And this is why I love Coinergy, because you can do a lot of things like that. You can even draw, like say for example, you recognize patterns sometimes, and we'll get into that later, but like here is a point here. This would be what we call a shoulder. This would be the head right here, and then we can kind of see a shoulder again right there. And it's pretty even. We can see a green here, a green here. We can see that this is a head and shoulder pattern, we call this. So here's the head, excuse me, here's the left shoulder, here is the head, and then here's the right shoulder. Now when we see these patterns, we see opportunities. We see where, okay, usually when there's a breakaway, that usually means that just after that, there's going to be an opportunity to buy. For example, right down in here. You can see that. That's apparent once we're actually able to go, wow, there is a pattern there. We can see that. This is called a head and shoulders pattern. We'll talk about that later. But anyways, Coinergy, you can use a lot of really cool stuff to draw. You can, if you want to share charts with people, if you want to use a brush on here, if you want to add text to point out a certain part, if you want to put an arrow on something going, okay, well there was a low market right down in here. You can do arrows. You can draw a whole lot of stuff. You can put Bollinger bands on it. You can change the colors. So that's what I wanted to show you with this here. And then we can obviously throw that away. Now the next part I want you to see is buyer support, seller resistance in bull and bear markets. Now there is a very, very small area right in here that I will show you. Where did it go? Back in here. Let's go back out a little bit, and we'll find, okay, right in here is good. I'm going to actually take this line and delete it, but notice something here. Notice how right between here and here, we're not going above this right here. See this? It's not going above this. It's not going above this at all. So what we're actually seeing is some seller resistance. Notice this red bar here, and the buyers aren't actually buying it up any higher than this point either. So we see this. You can actually see this is a tiny little part where it's really in overall. We're taking the whole market into consideration these few months. It's in a downward a downward bear trend. But in this particular area right here, we can see where even though it's in a downward bear trend, we can see some resistance and some support. Now, let me just go like right here, for example. Do you see this? We're getting a lot of buyer support right here. We're getting a lot of buyer support just in this little area, which, mind you, is between July 13th of 2015 and September 14th of 2015. So we've got a 3-month period. Doesn't look like much, but really, I mean, if you were zoomed in on this market, you're not going to be looking at it over, a year's worth of time. You're going to be looking at that particular week or month and just analyzing that particular week or month. You're looking at this going, okay, well, it's reached a low here, right here, but it opened back up, reached a low, but it opened back up. It's going a little bit higher. It's going a little bit higher. Buyers are buying the market back up a little bit, but there's not enough buyer support to keep driving the value up. So we meet some resistance. We meet some resistance here where the sellers are trying to make some sells in here. They're trying to make a little bit of money. They probably own these coins for less than this area. That's why they're selling out right here. But it just can't sustain going any higher than this, and we meet some resistance. So you can see, even in this little area right here where we have an actual mini bull market upwards just for 3 months here, we can see that we are meeting some seller resistance right here. We're finding some resistance. Likewise, in some areas, there is not enough buyer support, so we actually see, like right in here, for example, we see where we are not having any buyer support and we're just going downward in a downward trend right here. We can see a little point here, 1, 2, 3, and so on. Typically what you're looking for is oftentimes you'll find even in a bull or a bear market where it's going up on the bottom, but it's staying level at the top, like right in here. It's not doing the same thing. It's not reciprocating on the other end, on the higher end of the scale. It's not reciprocating. It's really stayed level right in here. While the buyers have pushed it up in here, the lows have been pushed up right here, but the highs are staying the same. They won't go higher. Whereas right in here, the highs are really more or less, they're going down. They're going down right here. But we can see, even in little areas, like, let me find another spot where we can get a good example of this. We could probably get a good example of this on high scale right in here. So, let's see, like this little area right in here. Look at this. If we take our line, we go right in here to right here. That is from 529 to 619. So we've got about 20 days in here where the lows are not going lower than right here. They're just not going lower. There's not enough going on. There's not enough buy-sell orders to have it go any lower than this. The sellers are trying to sell a little bit right in here. There's not a whole lot of buyer support going on though, but we're meeting a level of resistance right in here. We're meeting a historical point of resistance and support right in here, not allowing the market to come down anymore. But on the high side of it, we see that it is coming down. See? So the high highs are becoming less powerful and they're getting lower, but the low lows right here are sustained. They're staying the same. So even in bull and bear market trends and bull and bear markets, you can really begin to see areas where it flatlines and there's not enough seller resistance to sell the market back down here, and each new cycle, it's just the low is very level. It's staying the same. But the high is being brought down. So you can pick apart these little patterns all over the place if you know how to read these charts. And it's very good knowledge to have. Also, you can really see and get an idea for when a coin launches on the exchange. You can see what happens. As we talked about before, oftentimes if it's on a bubble, and we'll talk about this more when we talk about our ICO module, but often when a coin hits the exchange and it's on a bubble, it's overbought in the pre-launch phase, in the phase prior to it hitting the exchange, and it's overbought, so the market can't sustain that, and then it just drops immediately. And then sometimes, say the creators of the coin, the developers of the coin, they hold, say, 60% of the coin, and only 40% of it is available to the public at this point. If they decide to dump their holdings onto the exchange, what's it going to do? There's a huge, massive supply, so it's going to drive down the market. Once again, the sellers have control during the bear markets. The buyers have control during the bull markets. So they sell the market down, and that's what we see happened here. And then kind of leveled it out. It finds some levels of resistance and support. And this area right here is very important to take note of, because this right here happened a couple years ago. And this is a historical point of resistance and support. I bet you if we zoom out on this chart, we're going to meet it again in here. And we see that right in here. Notice right here where I've drawn these lines. Follow this over and take note that where it's at right now is a historical level of prior resistance and support. We can see that over here. It has reached an area. You can see right there. The lower shadow came down. It's literally come down to the exact point right in the middle of this historical point of buyer support and seller resistance that we have pointed out, where it kind of flatlined and there wasn't a whole bunch of volume going on. It's now reached that. Oftentimes, coins will return to historical previous levels of buyer support and seller resistance. In the next module, we're going to talk about identifying patterns such as breakouts, breakdowns, bull pennants, bear flags, head shoulders, Adam and Eve, which is a sign going back into a bull market. We'll see you in the next module where you're going to learn to identify patterns so you can make very educated trade entrances and know where to maximize your profits. If you recognize these patterns, I'm telling you guys, if you learn to just see these charts, I know already by now you're looking at these completely differently than you ever have before, because you can now look at a chart and you can immediately just go, oh, I see, that's a bull market. That's a bear market. Oh, that's a trend because it had 3 points going up in a bull market. It had 3 points going down in a bear market. Green is the front side of a bull market. Red is the back side of a bear. Red is the front side of a bear. Green is the back side of a bear. I see that. Oh, look, there's his historical point of buyer support and seller resistance. And look at that. The volume's not there. But, of course, the volume's going up here because look at the volatility here in such short periods of time. You're learning to see that. And in the next coming videos, you're going to see head and shoulder patterns. You're going to see the Adam and Eve patterns. You're going to see capitulation candles. So you're going to understand a lot more. And all of these patterns are indicators towards what the market is going to do in the future. And you can learn from the markets in the past and recognize these patterns. So when you're analyzing a chart or a coin graph in current day, in real time, you're seeing the pattern. You're going, oh, I've seen this before. I know what's going to happen. Great time to buy, and you'll understand that. We'll see you in the next video.